Today, we are very, very fortunate to have with us a CPA, Victor Garrido, Senior Victor Garrido, who is a part of our Business Builder Workshop in Espanol. So we welcome Victor, whose firm is CPA Services, a full-service multidisciplinary accounting firm. Victor has been working for more than a decade with businesses, with entrepreneurs, with startups, with individuals. He brings a plethora of expertise in taxes, in consulting, in accounting, working with startups. He provides Social Security analysis, estate and trust tax preparation, tax presentations. But one of the things that is critical for you is his ability to work with you and help you with tax strategies. People are always afraid of taxes. They're afraid of what they owe and how will they ever get out of debt to the IRS. These are the kinds of opportunities that you have to work with strong CPA firms. Even though Victor is our presenter today, as I called out Steve Rossman, PIDC knows the professionals that can help not just filing taxes. Anybody can file taxes, but you need professionals who can sit with you as an entrepreneur, as a business person, and have a tax strategy. So not only can you get out of debt with the IRS, but that you have best practices so that you never find yourself in those situations again. And so right now it is 9:04. I want to give Victor all the time that he needs. I want you to have all of the time that you need to ask Victor all of the questions and leave today armed with information that will make your future tax years very profitable for you and as growth tools for your company. And so with that, Victor, I want to thank you for what you have done with PIDC up to date. And this is a very special session on today. So thank you so much for coming to talk to these businesses. And with that, I'm going to get out of the way.
Marla, appreciate your warm introduction. You said wonderful things. Hopefully the people that will watch this presentation will enjoy some tools, some strategies for tax planning. So, they don't need to pay more taxes than they owe. So there are a lot of discussions that we have around this time of the year with clients. So we are going to share with you some of these tricks or tools so you can take advantage of it. So I will share my screen, this one. So just so you all can see the presentation, hopefully you do. So the topic today is how to get ready for tax season. And why, we are going to have certain objectives, why it's important to file taxes, some tips for individuals, right? If you file as just an individual person, tips for business owners, when you might have to ask for help from a third party, right? Like CPA, enroll agent, your accountant, or someone, and when you might be able to do it by yourself, right? And then some common red flags. So when is the IRS going to get you trouble, or when you might not be able with the right tax preparer, or there might be someone that you're working that might not be the perfect one. So as a general PIDC disclaimer, these are just training materials. They don't apply to a particular situation. We're just talking about general cases. And always to check with a tax professional, right, or with a lawyer, or with someone with your advisor. And this is not an endorsement of our services or any other services. So you can just check with whoever you want to. So this is me, probably a few years ago, and I have been studying a lot in Europe, in US. I'm a CPA and enroll agent, so I have passed a lot of exams. And I keep studying quite a lot the tax code. The tax code changes, so that's the reason we just keep going through it. So why do you think filing taxes is important? I don't know if anyone wants to say why they think taxes are important. Any comments? You know, anyone wants to like try to guess or say personally why it is important? So the reason is you use the tax returns, right? Like one of the reasons, and there are many reasons, right? You use your tax return to ask for your mortgage. If you want like a home repair loan, a business loan, right? Like the first thing that the bank, financial institution, PIDC, right? PIDC is going to tell you, okay, how is your business going? What is going on? So what do you present to the tax authorities? So that is kind of a way for them, for underwriting, to know your numbers, if your company is making money or not making money, and how much they can lend you, right? So that would be something pretty important. So that's the reason. If you're compliant with your taxes, if it shows that you have not filed taxes, then they might have some issues, right? Another reason is like for your retirement. If you have been filing your taxes and paying Social Security, Medicare, and so on, then you will receive pension proportionate what you were contributing, right? Like if you reported almost nothing, there's going to be a smaller pension, right? But if you have been contributing, maybe you max out on your pension, on your retirement. So that is something to consider too, right? Like, because so many times we don't think about like what is going to happen in 10, 20, 30 years if I have not been reporting my income properly, right? And then I will have a lesser benefit in the future. For immigration, so immigration status, when they ask like you go through your citizenships, they will ask for the tax returns, and the tax returns, even like for immigration purposes, it shows your good moral character. So you want to become U.S. citizen, that's okay. Have you been doing what you're supposed to be doing, right? So if you don't have it, then they might say no. So sometimes they just rush to file all the tax return of the last 5 years, 10 years in a month or 2 months or 3 months. That might cause an issue. So timing of your filing, that's extremely important too. And also refunds, like some people might get refunds. Even as a business owner, you can get refunds if you withheld or you made estimated tax payments. So sometimes for some people, individuals, they're looking forward to the refund that they might get in March, in April, in May, right? Because it's a way of savings and get like some extra money from those refunds. And then keep in mind in the US in general, there's an overcompliance. Like people file their taxes, they file it accurately, they pay their taxes, right? So usually it's really good because they don't want to get in trouble with the IRS. So that's kind of the main reasons. If you get in trouble with the IRS, there are ways around it, as Marla mentioned, but they start counting, like they start considering interest penalties. So you don't want to be in that position. Usually it is better to pay your taxes in time, as much as you owe properly after all the deductions, considering all the different advantages that the tax code has for you. But we will recommend to file on time and file especially. So any questions so far? And I have a small quiz that I love to do with the participants, with like in my seminars. So I don't know if you know who said, in this world, nothing is certain except death and taxes. Any guesses? Anyone looking into Google, trying to see who said that? So the response is Benjamin Franklin. Okay, so that's true. Like even if you don't pay income taxes and you say, oh, I always get a refund, you're paying sales tax, right? You're paying probably property tax. Even if you don't own it as a tenant, you will pay somehow property tax in the rent you're paying. So there are a lot of taxes around. It's not only when you pay like taxes at the end of the year, but you will be paying taxes all your life. A lot of people, they don't realize, but there's like gas on the gas there will be taxes, like certain things there will be taxes on your tires. In PA, there's the PTA that they $1 of each of your tire goes to a fund for roads and things like that. So there are taxes everywhere. The other question is, why was Al Capone sentenced to 11 years? right? And I give like different options. Anyone wants to try to guess which one? Look, a good looking guy. So, you know. So it was tax evasion. So tax evasion, you know, that's the reason Capone was. So look, he did almost everything that he should have not done, right? He was a criminal. And the reason they got him to jail, it was tax evasion. So just be extremely, extremely careful, because, you know, there's a reason why people are compliant, right, with these things. So how do we get ready for tax time? It's right now on December 2022. So we are like a few weeks from tax season. So I'm going to split it in two parts. One will be individuals, so planning for individuals. Any advice, anything that you do at your personal level to get ready for tax season? So before year end, so usually what we recommend all our tax clients is to review your income. So what is my income? Do I have a W-2? Do I get a 1099 because I'm an independent contractor or similar? You know, are you in line with these people? I mean, the prior year losses, any capital gains? Did I sell any securities, stock or similar? Any unusual transaction. So from a personal point of view, you have to check what's going on with your tax return. Then what was my withholdings? How much money did I pay to the tax authorities already? What are the estimated tax payments? So did I send checks to the IRS for my personal tax return? Did I send it every quarter, right? So that is good to know before year end. There's still time if you have to submit estimated tax payments. You can still make changes to make final transactions, like sell more stock or what they say, loss harvesting, where you send some securities with a loss so you don't have to pay on your capital gains, things like this. So you can do those before year end. And then after year end is when we get all the documents, right? You get like all the documents from your company. If you're an employee, you get the W-2. You might get like your brokerage statements. So gather all those documents, the W-2s, the 99s interest, the mortgage, whatever you usually get. And if you have done any additional transaction, you should gather those documents because those documents are sent to you and are sent to the IRS. So the IRS has already that information. Keep track of your deductions. This is extremely important, right? If you have really high medical expenses, you know, there might be a deduction for you. If you made donations during the year, if you have childcare expenses, if you pay for your kids' daycare or like summer camp or things like that, those are deductions. And then your retirement. So keep in mind that you could be contributing during the year, or you might have not contributed during the year, but still you can fund an IRA even after year end. So we always recommend funding retirement because it's good, like whenever you will retire, but also you get a deduction. You don't pay taxes on those funds, right? Like on that money, you don't pay taxes. So that is something really important to consider for individuals. Any questions? Any things that you think? Oh, I didn't think about that. Anything so far for individuals?
Victor, I do have a comment. One of the things that we have found is there are some companies that tend to hire 1099s versus direct employees. And then there are some businesses that really are not contributing significantly themselves into Social Security. I cannot tell you the number of business owners we have seen who have built a small business for many years. They're tired and now they're ready to retire, and they don't have sufficient funds in Social Security to live the same kind of lifestyle that they lived while they were working full time. So we can't emphasize enough how even the business owner has to make sure that they are preparing themselves for retirement and that they are also watching out for their employees, so the employees are not poor as retirees.
Yes, so it's interesting. There are 3 points on what you mentioned. One, it is like the distinction between employee and independent contractor 1099. So it's not up to the employer to decide. So the W-2 is someone that you employ in your office with your tools in the time of like the 9 to 5 or whatever the timing it is. It could be part-time, right? But the employee is someone that you have full control over, right? And the time that person is working for you, you have full control on how to do it, the tools that is using it, and everything. That's an employee. And that has to be with social security number and a W-2, right? A pay stub. The 1099 is someone like myself, right? That I work for a client. The client pays me a fee, right? But whenever I do their tax return or I do the presentation or whatever it is, it's up to me. I just have to show up whatever time for the presentation. That is a 1099. So let's suppose a plumber is a 1099. Someone that comes to your place and like your office, that will be an independent contractor. That is one. So it's not up to you. You will get in trouble with labor, Department of Labor, and even at the state level, right? Like, and with the IRS. So there's like distinctions, and I'm glad that you brought that issue. So the second one is like owners not having enough retirement. So for an owner, so many times if they don't pay enough to self-employment tax, and that's the way that so many times they pay Social Security and Medicare, or they don't have a W-2, or there are different reasons, they can always contribute to their retirement. And it's extremely interesting, and it's sad in some like times because they don't see it. So that's the reason, like, you should check, hey, what are your plans? What other source of income? Like, do you have anything else when you just want to sell your business? And is that going to cover your living expenses for the next 20 years, right? So there are like many options for them. And as a business owner, sometimes you even have a tax deduction. It's a business expense in some cases. So I think it's an interesting point that you mentioned. So, it is always, I think it's eye-opening, like having this discussion, and we see in the community, some issues or that, we're trying to fix. So,
Victor, we do have a question. Someone has asked, how do you establish the estimate tax payment for an individual and for a business?
Yes, so that's a great question. So let's suppose Victor Garrido owes last year $10,000 in taxes, right? Because my business went really well and I owe $10,000. So what the IRS wants is, like, in every quarter, in April, June, September, and early January, instead of paying the $10,000 in April 2023, right? They want me to break it in 4 payments, $2,500. When I prepare, or we will prepare the tax returns, you should get a voucher with the estimated tax payments, and it will see, like, it will have like the voucher with your Social Security, with the date you have to send the check and the amount of the checks. And in the IRS, what they want to do is, okay, I will get $2,500 in April, $2,500 in June, $2,500 in September, and January 2023, I will get another $2,500. So by the time you filed your tax return in April 2023, that tax liability, that is the tax liability estimated on your prior year, has been already covered, right? If I expect like a similar year, look, things go really, really well, then I will have to be adjusting, increasing slightly that amount. But that is something with your tax professional you should be discussing at a minimum. Cover the money. So the problem we always have, or like we have when we get like new clients or people that are not aware of these items, is like you end up paying taxes the following year with money that you made in 2023, right? So you don't want to be doing that. You want to be like paying your 2022 taxes with money that you generate in 2022, because otherwise the business is already like owes like $10,000 in March or April of money that you got before. So you're like starting behind. So we always like all the payments for taxes to be made when your getting the money. So you know already you maybe have a tax account or you're really good and you put aside like 10%, 20%, 30%, whatever the percentage should be in your case. So that way you don't think you have the money and then you have a really big tax bill. So that's a great question. So hopefully I reply, but you have to send the vouchers with your tax estimate that are generated in your prior tax return, and things change, you should ask for a new tax projection from your tax professional. So I think all the planning for individual items have been discussed. Business owners. So what do we do? Before year end, we will have to review your profit and loss. So let's see, it's exactly like an individual. Let's see how much money the company made net after like all the sales, all the revenues minus the expenses, how much is there, net income or loss. And then if you have an S corporation, what was your salary? Because the IRS wants you to have a reasonable salary for an officer of the S corporation. See what the 1099s are, right? Like if you have to send 1099s to independent contractors, maybe you should be asking for the W-9s for those vendors and contractors. And then also there are programs still available, and I will mention this one at the end of my presentation, but there's the employee retention credit that you can get up to $26,000 per employee. So if you have W-2s during the pandemic and you were paying employees, you might qualify if you either reduce the income or you had like some government shutdown, supply chains. You have to more or less have been impacted by the pandemic. But I think it's interesting because there are still funds available. And then the recovery startup business, if you started a business or opened the business after February 2020, then you can get up to $100,000 in payroll credits for 2021 Q3 and 2021 Q4. So that's another program that like some people, they don't know. So it's good before year end or even after year end just to consider those programs. And I will talk more at the end. Also the review of the balance sheet. The balance sheet just shows the equipment, the loans, things like that. So has it been any capital improvement? Has been like any equipment, right? So all those you can potentially depreciate and bring down your taxes. So that's really interesting to see before year end. Or maybe you need a car or you need a truck and buying now in December that equipment or that vehicle is going to make you pay less taxes or pay no taxes. So that's something that we always discuss at the year end, discussions with our clients. And then also review what the withholding has been, the estimated tax payments, that you have sent to the tax authorities. And then after year end, you need to get the documents exactly the same, but in this case, it's for the whole company, all the W-2s, all the summary that is the W-3, the 1099s that you might have received, right? So it shows like what income you have shown, or like other people have reported about your income. 1099K, that is a new form. So all those documents you have to provide your tax professional. And then you have to close the books. Hopefully early January or before February, you should be able to run your profit and loss for the prior year, your balance sheet for the prior year, and make any potential journal entries. There are sometimes entries that maybe I paid with my personal credit card, some business expenses, so don't forget about those. People forget some of the business deductions. So sometimes it's good just to discuss with your tax professional, remind yourself, what did you do during the year? Hey, now that you mentioned, right? Oh, I did the A, B, and C. It's like, okay, this is not showing, right? So it's always good just to double check or think like, hey, did I pay all the business expenses through the business bank account and everything is reported here? Or did I pay anything, through my personal, or maybe I pay like the mobile phone through my personal, but it should be a business expense. So there are some expenses that sometimes are charged to the wrong account. And also like finalized retirement contribution. So if you have a 401k, if there's a bonus or there's a SEP IRA, there are different options. So sometimes you can contribute before you finalize your tax return. So even if it's after the year end, you can still contribute, and it's considered still an expense, a business expense for 2022, even if it's paid out in 2023, the beginning of 2023. So any questions for business owners? This is a little bigger, checklist for business owners just because there are more documents usually. So.
We do have a couple of questions in the Q&A. What are some common business expenses that business owners forget about or don't take advantage of?
So great. This is a discussion I have every week and then every day in tax season. So for example, to run a business, you need a car, right? And you might be using it only 80% for the business, but still you should get like 80% of the car insurance, of the repairs, of the cost of the car, right? And maybe the other 20% is for personal reasons, but still like so many times they only include the car or they don't include the car. And then they don't include the repairs and maintenance. They could be either that way or the mileage. Whatever is more beneficial, you can take. Internet. You need internet today to run a business. So even if you have internet at home, you will be able to have that as a deduction, right? If you're using it for your business, you need a mobile phone. You might need a computer, an iPad, certain like a printer, right? All those, we never had issues because those are reasonable expenses, right? They are required for your business. So we never had issues even on IRS examinations. They understand there are certain costs associated with running a business that people forget, right? Like sometimes they put it on their personal. And then it's on a case-by-case basis. It could be a travel that you did some research, you met with certain clients, so there might be a meal that they used the wrong credit card and they forgot about. But those are like really common expenses. If it can be like somehow related to your business, not going to Disney just for fun with the kids, but maybe there was some activity there, you could claim it as a business expense on certain cases. And then I see another question on if you overpay, will you refund a refund? Yes. So let's suppose I paid $20,000 in taxes on tax estimates. And I owe the IRS only $10,000. So then $10,000 is a credit. So I can do two things when I file my tax return. I can ask for that money back, or I can roll forward that 10,000 credit to next year and say that way I don't have to pay you estimated tax payments. So sometimes if you know you're going to pay money to the IRS, next year, or you want to make estimated tax payment, then we already rolled that money. So that way you don't get a refund, and at the same time you have to be writing a check, especially when the refund might take some time to get it. So sometimes if you overpay taxes and you're like a business owner, if you're a business owner, you might want to just use it, roll forward that refund so that you don't lose the money. It's just used for your next year tax return, and you don't have to send tax payment, or the amount of tax payments, estimated tax payments, are smaller. But yeah, for sure, if you overpay, you're entitled to a refund, for sure. Any other questions? So there's another question of what filing is due January 15. I don't know if any file. So tax filings are either March 15 or April 15. If it's an S corporation or 1065 like LLC with two members, is back then is like March 15, around March 15. If there's a holiday or something like that, that will be later. And then April, it will be C corporations, 1120s, and it will be the 1040. January 15, I'm not sure. Like they might be like you're referring maybe to other taxes, but for example, January 30th is or 31st. I'm not sure if the January has like, let me check really quick. It has like 30 or 31 days. It has 31 days. So that will be the 1099. And if the taxes aren't prepared on time, should I begin the process for an extension? So if you don't file on time, yes, you can file an extension, and it gives you time up to September 15 if it was due in March, or otherwise until October. The problem with the extension is the following. If I owe money to the tax authorities, I should pay my money in April. So the money is due in April. If you extend and you owe money, then you will owe interest and sometimes penalties. So just to let you that know.
Victor, that's a really important point, because I get clients who think, well, they say, well, I filed for an extension, but they don't realize that if they have a balance due, that each day there is the penalties and interest, and they often are surprised. So I'm asking them, well, did you get and that really is why we decided to do this webinar, because so many businesses think it's easy enough to just file the extension instead of getting the documents ready now, and then they find out that they owed money and they don't get the taxes filed until September of the tax year. And then they're behind the 8 ball with just throwing money out the window.
So there are two issues, and the interest and penalty is not even the worst part. If you file later on, like 6 months, a year, 2 years, you're giving more time to the IRS and the tax authorities to review your tax return. You're already almost red flagging you, right? Because you're a late filer, must be something going on, right? So that is one of the issues. You're giving the IRS more time to look at your documents, tax returns, and everything, which we don't like. And if you're a business owner, in 2-3 months, you should be able to figure out the numbers. Like usually we recommend that our clients to, on a monthly basis, like more or less know what their numbers are. It could be on a piece of paper. It could be in an Excel, right? Like, and they can message me. I have an Excel that I send to a lot of our like smaller clients. It could be on your QuickBooks, in your whatever program you're using, right? But as a business owner, you should know what your business is doing and where you are at any time of the year. Like it cannot take like a year and a half to know what you did, right? So usually January to February, that's where like I think books should be closed, right? So I'm not, I'm really strict with our clients on that. And look, we have some people that extend, but there's really no benefit, and they will end up paying way more money that they have. When you file the extension, you can send a payment with the extension. But in order for me to know how much the payment should be, I need to know more or less what the number should be, more or less. Maybe you're waiting on something. So then make a payment with the extension, so at least the interest and penalty will be smaller. So that is something you can do. Or maybe you're waiting to fund the retirement and you don't have enough liquidity to fund the whole retirement. So that happens to some of our clients. So there might be reason why you're extending. But overall, if you can avoid it, there are way more benefits. And, interest and penalty is one, but the IRS not looking at you is another that is even bigger in like for many of our clients. So I see another question on 941. So 941 is asking like, is there any relief on 941 taxes? 941 taxes are payroll taxes that are done quarterly after you have entered into an agreement. So this is a peculiar one, and I deal with the IRS every week. I would say every day, but not every day. So the problem with IRS, even when you enter into an agreement, they tell you, hey, this is the amount of money you owe, but they keep calculated interest and penalties, right? So the problem is, unless you make a payment big enough that to cover interest and penalties, so otherwise, like sometimes I have seen the outstanding balance grow faster than the payments. So even if you were making payments to the IRS on certain debts, outstanding balances, if you don't pay fast enough, then it will keep growing. So you can ask for removal of penalties. Sometimes there are different ways to approach it. You can do an offering compromise, non-collectible, like there are different options to do. And sometimes you can ask for the removal of penalties depending on what happened, right? Like, hey, I have fraud, I was sick, there was the pandemic, there was a special program that the IRS had for 2019 and 20. If you file before September 2022, that they will remove certain penalties. But the IRS has like 5, 6, 7 different penalty types, right? So you can ask, if you get into an agreement with them and you get it with a nice IRS agent and you know what you're talking to, you can remove penalties, and you can ask for those removal or like discount the penalties if there's like a reason why that happened. So you have to tell them a story, and sometimes know what like the right procedure it is in order to reduce the liability with them. So with the IRS, I will always recommend to go with a professional, with your tax professional or someone who is familiar with the IRS, because they have different programs in place, and that can save you like a big amount of money. The IRS is there, like they do a great job, but at the end of the day, they are looking for themselves. So there's another question that I will address, and then I will move to the next section. Can you inquire the status of taxes owed? Yes, you can call the IRS to their phone number. You can Google IRS individual service they have. It has been quite difficult lately to talk with them because they have like not enough IRS agents, but they just got $80 billion. So I'm sure they will get much better. So yeah, 80 billion, 45, I think is for enforcement, but so we will see a lot of more audits. But you can call the IRS, and with your social security or with the EIN of your business, you can ask what is the status, is there any balance due, what is the years. You can have that done by you, or if you work with a tax professional, you can sign a power of attorney, allowing them to talk, and they can. There is a special number for tax preparer, the tax practitioner hotline, so we get ahead in the line. But even for us, has been extremely difficult to talk with the IRS these days. We might call and say call tomorrow, but I think that will change really soon. The IRS has been hiring a lot of IRS agents, so we expect this situation to be easier. But if you're not able to get in touch with them, keep trying, or just reach out to your tax professional to help you out with that. So we will move to the next section. Do I need help, and who can help? I think this is like really interesting, and I'm glad Marla is here just to confirm and mention some of the scenarios and situations we see, right? So what can a tax professional do for you? They can help you with your financial. Your financial is your business reports, right? Like the balance sheet, the profit and loss. So you will know how the business is doing and how much you will pay on taxes. They can help you collect information, fill out your tax return, or even if there's any outstanding, they can reach out the IRS or PA or Philadelphia on your behalf. Then help you with tax planning. I think this is extremely important when you're a tax business owner, especially even as an individual, to reduce your tax liability legally, right? So you can reduce your tax liability legally, and the structure is extremely important. The LLC, S corporation, C corporation, they all have different benefits. LLC usually with a single member or with several members pays like 15% of self-employment, while like S corporation pays on the W-2 of the officer. C corporation has double taxation, so there are benefits to each, but even having the same entity under different structure will end up with a completely different tax bill. The tax professional can help you also with the IRS, represent you with the IRS, like all that, all those items that and there will be more. Like each tax professional you have to check, and we will give you like later on like a few places you can search, or like our firm, they are. I'm going to give you like a few options so you can talk with a tax professional. So should you hire a professional? So sometimes if it's simple enough, I just have a W-2, maybe you don't need it, you can do it yourself. But once it start getting more complicated, do I have kids? Do I work in different states? So I will pay taxes to one state and then get the credit on the other one. We don't see like those tax credits from one state versus the other done properly. So you end up losing like hundreds of thousands of dollars. Do I get rental? If I have rental incomes, do I have property? Am I depreciating the properties? Do I get gambling? Like, do I get 1099Gs, right? Like saying like I made like money like on gambling. Like I went to the casino, I won like $10,000, right? So it will have to be reported. But maybe I have other expenses. Like later on, it gets like more and more complicated. If I'm a business owner, right, it gets more and more complicated. Probably you need like some help. If you're an individual and things get more complicated, I think the value provided is higher than the cost. So, you will know, but some of these items, if you check many of these items, and each of you can decide. You know, at that point, I think you will highly benefit from a professional. You know, and then I put like 2 stars on some of, like, if I have issues with my previous taxes, right? They were wrongly filed, I got notices, I owe money to the IRS, highly recommended that you go to a professional, right? So those are some of the options. It's a self-assessment, right? The more you click on these items or these points, then probably you need some help, you know, and it's up to you to decide. So who can help you? So anyone, you could get help from someone on the street. As far as you don't pay that person, as far as it's for free, a family member or whoever, like someone on the street could help you with taxes. Is that, you know, the best option? Maybe not. But for free, anyone could help you. For payment or compensation, right? Payment or compensation, if you give me something in return, right? Then it has to be a PIDC holder. And PIDC holder is kind of easy. You just go to the IRS, you can put PIDC holder as far as you don't have any, I think it's child payments that are outstanding. You don't have any payments to the IRS. You don't even need to have any knowledge. As far as you meet certain requirements, probably you have to be like not a minor, right? Like you have to be an adult. You have to have like certain things. I don't remember exactly, but they are like really easy, like 99.9 of or 99% of the US population probably like qualify for those. Then you can get a PIDC number. It's kind of a registration that you will be preparing taxes for compensation. So as far as you have that, you could be preparing for compensation tax returns, which is an issue. And then a PA New Jersey, let's suppose to states is anyone. So there's no PIDC holder. The PIDC holder is at the federal level. At the state level, usually there's not a code, there's not like a register or a registration that you have to do. So yeah, there's really little registration or regulation on this area and this topic, which, you know, brings us to the next slide. So who are tax professionals, right? So unlimited representation rights, and this you will see it on the IRS, and the IRS is always sending emails and everything and putting information out there. So anyone that can represent all taxpayers is an enroll agent. An enroll agent is someone that passed 3 IRS exams. I'm an enroll agent, and then it has to continue education, like requirements of 72 hours every 3 years. So you could keep it studying. CPAs, they have an education requirements, right? And then they have to pass 4 CPA exams. And then the same, 40 credits every year. So, and then they have attorneys, like also a Juris Doctor, you have like a requirement of education, you Juris Doctor, then bar exam, and then they continue in education. So those are the ones that can represent anyone on examinations, audits, and similar, right? So those are some tax professionals. Other tax professionals, they have limited representation rights. Some they might have like filed your tax return, so they are kind of familiar with your case. So that might be, but if someone new goes to them, they might not be able to represent you in the IRS. And then those who have a PIDC, they might be able to represent you in certain cases, not on all of them. And then some of them, they can voluntarily decide to do some education credits, or they don't have to. As a PIDC number holder, there's no requirement of education. You know, so there's no continuing education, but they can decide to do some training if they decide. So, you know, when you go to a tax professional, I will highly recommend to know what is their background, right? They might be great CPAs or enroll agents or attorneys or great like PIDC holders, but might not be the case, right? And so it's good for you to know if they have those studies, they know the tax code, they do like their education, how they keep current, right? Because the tax code is changing constantly at the federal, state, and local level. So, you know, you have to decide which are the professional that might be working for you, right? And why might be like the fee different and everything. So what are your options? You can get it yourself. PIDC program is a program that if it has like low income, you can like join that program. There's tax software that all of you know you can do online or your computer. They are tax preparer that might be PIDC holder. I mean, they are PIDC holders. that might be for simple tax situation, and there are national chains, enroll agents, certified public accountants, lawyers. So each of them, they have different benefits. So, a few options there for you to check how do I find tax professionals that someone was just asking. You can get referrals from friends and family. If they are happy with it, maybe there's a reason. You can go to the IRS website. They have a who is registered. That doesn't mean that is good or bad. It just means that they are registered. There are beta sites you can see in Philadelphia and all over in different states. If you meet like certain like low income, keep in mind that they will prepare your tax return, but they will not give you much advice. So that's usually, just keep in mind, and they might not know really well what they are doing. They get a little training, and sometimes they are university students that they are just helping out. So, I will be careful with those ones. But in some cases, it's really good. It's free and it's for low-income people in general. So then you can check with the Board of Accountancy. You can check with PIDC, right? They have a number of professionals that they know and they recommend. They might recommend you a few names. Referral from another professional like bankers, insurance agents, lawyers. We work with a lot of other professionals. We get a lot of referrals from them. And us, yeah, we take in new clients. As far as you're nice, they're more than happy to work with you. So they're like our phone number from our office, our email, and one of my partners. We are like different CPA partners. So Erica Greenberg and Victor Garrido. So I speak English and Spanish, and Erica is more English. But yeah, so that's some of the places that you can find professionals. And now I think the bonus, because we have like around 10 minutes, is what we see like the most common errors or red flags in tax return. So this is kind of like the ending, the sweet ending. So in individuals, we see a lot of inadequate tax returns. So like married filing separately versus jointly, or head of household. So how they don't choose the right category. In general, married filing jointly might be a better option. So just because the deductions and everything is higher, there might be reasons why you file married filing separately. So it's always good to know what am I filing and why I'm filing that way. So it's always good to discuss, because there are different benefits. Missing or misrepresenting credit deduction. There are always issues with earned income, child credit, those ones. So that whoever you're working with, or even yourself, don't forget about those credits or those deductions. We have clients not missing on certain deduction or credits that they were entitled. So it's always good to check that you're not missing at least the big ones, right? If you have a Schedule C, a business, a small business, usually on a Schedule C, they are really good at reporting the income on the 1099, but you miss the expenses. So the expenses are as important as the income, because if I have an expense for 1,000, it means that my income went down for 1,000 because it's the net. So I'm going to pay way less taxes. So if you have business expenses, don't forget about those, right? If you get a 1099, or I made $50,000 in the 1099, well, that's not your income for the year, because in order to do that activity, right, like I made $50,000 preparing tax returns, I had to get my computer, I had to pay my rent for the building, I have employees, so I didn't clear $50,000. So just be extremely careful, because so many times, like, I don't know, how do I have to pay so much in taxes? So probably you were not reporting what you made and what your expenses are properly. IRS audits. If you're missing tax documents, if you don't report a 1099, the IRS has that information. So you're not going to get smarter than the IRS when they send you one tax document to you and another to the IRS. The IRS has already that information. The only thing that is going to happen is you're going to get a letter from the IRS, and maybe someone is going to see your case. They will send you the recalculation saying, hey, you forgot something. Is this correct? But they will consider that document, not the expenses associated to it. Okay, so careful missing tax document, misrepresentation of tax payments. If you say, oh, I paid you already $20,000, but you only paid $10,000 in estimated tax payments, that's a big red flag, okay? Claiming wrong dependents, there are always issues with like who is claiming dependent and things like that. And then related to businesses, the tax structure, and Marla mentioned this one from the beginning, right? There's a lot of structures that are wrong and they don't look at, you know, why it was created that way, or they were like misguided on that part. That is one of the first things that we see. So many times there's not the proper guidance on accounting, and then generates fines and penalties. So that's another issue there. Lack of tax planning. There was a QBID and a special credit for like 20%. There is a 20% income tax deduction that was approved in 2018. We still see people that they don't take advantage, or you know, they don't consider. This is a 20%, and there was like a lot of you know, lack of knowledge in the first years, but still like it's happening, right? And you might qualify, you might not qualify, but it's good like to look into it and calculate properly. And then for the IRS audits, we see if there's like cash or income missing, right? Like let's suppose I have a restaurant and I only report what it comes in my credit cards, but people pay cash too. So I'm underreporting income. The IRS will know that I'm not reporting certain income, right? If they pay me cash and I never deposit that, or it's never reported in my tax return. If I include expenses that are not business related, or like they don't make sense for my business, keep in mind you tell the IRS on the NAICS, NAICS code what your business does. So they compare your business with other businesses. So you cannot have, for example, myself, 50% on travel expenses, because it's not normal for the type of business I'm doing, right? So I'm not running a trucking company. So, you know, for CPA firms, then that is not something that is normal. Maybe I have my payroll really high. I might have my software and like tools and things like that. Computer expenses really, really high, you know, and that will be normal for my industry. But it's really strange that I will have like my expenses really high on certain categories. Okay, so just be careful with those. And then also discrepancy again with forms that the IRS already have. The state audits we see on labor and also sales tax. If you owe sales tax, you're telling the state at the end of the year how much your sales were. And if you have not paid your appropriate amount, right, of sales tax, then that can cause a trouble. And then the local, for example, in Philadelphia, you have to file BERT, MPT, whatever corporate taxes, right? So that file it. Otherwise, they have a tax clearance. So when you want a permit or a license, it shows that you have not filed those, and they don't give you that. So yesterday, for example, one of my clients were like, "Hey, Victor, you filed this," and the city of Philadelphia was reported that we didn't file something. So I sent the tracking number and everything that it was filed on the system. So keep in mind that the city of Philadelphia is doing an amazing job and is upgrading their system, their tax system. So there has been some glitches and some information that was provided. So once you get a notice from any tax authorities, get your tax professional involved, because they are going to be familiar with what is happening. And sometimes it's the same notice for 100 clients, or it's the same notice for like 50 clients from the city of Philadelphia. So you know what's going on, and maybe there's something on their end, and you know it's really easy to clear. And sometimes notices is not as bad as it seems. So just to make sure, okay. So we have 5 more minutes. I would say be careful with who is helping you, right? Like promotions. I have seen even like tax preparation inside dealerships, tax preparer with not pitting, charging for service. That's illegal. Making payments to the tax preparer and they will pay on your behalf. Never do that. You know, it's crazy that I'm mentioning this, but this is happening. Like this is happening to anyone. Like the great business owners and everything, they completely trust the tax professional or their accountant, and they make payments to them and then they pay taxes. No. The money should come from your like bank account, or with a check from your personal bank account or your business, and it should go to the tax authority. There should be no middlemen, because if that person decides tomorrow they go to Bahamas or whatever with FTX and whoever else there, then you don't see your money, okay? Money has to come from you. Don't sign blank tax returns because they will put information maybe, you don't know what's going on. And you are responsible. Once someone prepares the return for you and you sign, you approve. Like I have discussions every week with people that they say, well, I didn't know they filed this on my behalf. I was not sure what was going on. Well, once you sign, that's like an agreement. Once you sign, you're responsible for it. And if it's self-prepared, it means that you prepare it. We see on some tax preparers that they just include the tax prepare, like the self-prepare, which means that you were doing it, that they were out of the hook, which is absolutely crazy. So just be careful with those. If you pay for the services, there should be the PTIN and their phone number, name, and everything because they were preparing it. They cannot be like promises of, I will give you a big refund if you pay me this amount. That's not how taxes work. And you can write a complaint. If something is an issue, that's an option there. So I think those are like kind of the general questions. We have a couple of minutes, Marla or anyone. I don't know if you have questions.
The thing that I always recommend clients have two professionals. First, they should always have an accountant. And then the second is a lawyer. But what we find is, and I'm sure we see it today, people will hear from you and say, I never knew this information, or I never got this information from my accountant. Well, I will tell you that's because you have the wrong accountant. And if your accountant is only filing taxes at the end of the year and not meeting with you throughout the year to help you, then you still have the wrong accountant. Your accountant should be the third wheel in your business. They should be the objective consultant professional who is helping to guide you to make your business the best. If your accountant is only saying to you, don't report this, don't report that, just to get lower tax liability, then you oftentimes have the wrong tax professional. Because for an organization like PIDC, we're going to look at your tax returns, we're going to look at your internal financial statements. And if you have such low income because your tax professional is telling you don't report everything, then we will question, why should we provide a loan to you? Because you don't demonstrate that you have sufficient income to service the debt. So the thing that really stuck out for me, Victor, is when you said the value provided is higher than the cost. And so you can't afford not to have a financial or tax professional. You cannot afford. And I thought about what you said, reporting gambling income. How many people are going to Rivers Casino or Harrah's, hitting the big one and not reporting it? And so rental income, I would love to see more businesses have rental income, which means you have passive income that can support you beyond just the revenue that comes from your business. There was just so much information, Victor, that you provided. I mean, and we have 60 minutes to get all of it done. It is now 10:01. I would love to be able to do this again, maybe at the beginning of the year. Can we make this presentation available to the participants, Victor?
Yeah, yes, for sure. Yes.
Okay, so if people would like, I would love for Victor to come back in early January so we can do this again, because I would recommend that you get this information. For those of you who have already started planning with your accountant, that's fine. Hopefully you took some notes today that will give you some ammunition as you're going to your tax professional. You can ask them questions and you can see how much they know or don't know. One of the things I really liked was the enrolled agent, and being able to keep current with what's happening with the IRS. There are so many accountants that are not keeping current with the IRS, which means you are not getting the benefit of all of the tax codes where you could have some real savings. Again, there's just so much we could say. If I can just do this one thing, Steve, you're on the line. Steve Rossman, you're still here with us? Can I ask you, Steve, to introduce yourself? And there you go.
Hold on
Steve,
1 second.
Okay, Steve is our good partner. So Victor said, where can you find good professionals? Let me tell you, you're looking at two right now. So if anyone has, one of the things that PIDC is really proud of is that we are able to identify high quality professionals. In this context, high quality tax professionals who help you with strategies, who help you with multiple disciplinary approaches. That's what you need. You don't need someone who just files taxes for you. You need someone who can take a deep dive, work with you, and come up with strategies for addressing taxes. So someone asked, is Victor available? Yes, Victor is available. Is Steve? Now, Steve's firm is specialized. They're going to help you with strategies also. So they're not here just to help you file taxes, but they are here to really help you with strategies. So Steve, are you there really quickly?
I am. Can you hear me?
Steve, for those of you who have been with PIDC, you know Steve has been a part of our financial statement series for a lot of years. So when Victor talked about, and we've talked about, is your company under the right legal structure? Because the legal structure will determine what types of tax benefits you get, what works best. So Steve, just introduce yourself.
Sure. Can you hear me?
Yep, we can hear you fine.
Awesome. Great. I'm Steve Rossman. As Marla said, thank you so much for the kind introduction, the kind words. I really appreciate it. I've been helping out with the tax side of the house for the Business Builder series for a number of years. Tiffany and I have partnered in that regard. And the main goal is to really open everybody's eyes up to what the different tax laws are out there and the different business structures that are there that might mean different tax things to different structures. So if you're a flow-through entity like a partnership or an S corporation, you have to be mindful of the income that's coming through. Is it ordinary income? Is it capital gains income? There's different things. What we want to do in these seminars is to educate the users so they know that what they don't have to know everything, but they have to know the baseline thing so that they know where to go and to use professionals like Victor and myself to help them to guide them through to be efficient in the strategies, to make sure that they're being tax efficient, to make sure that their business is growing, but it's not just making money, it's accounting for it and making sure that you're being as efficient and tax efficient as possible when you can be. So again, I don't want to take up everybody's time. I'm mindful of that as well. But thank you so much for the kind words, Marla. I appreciate it. Victor, great job, and good luck to everybody. Happy holidays.
Thank you, Steve. Victor, can you please put up the slide again that had the contact information? So where do you find a tax professional? I think that was a slide. Victor put a lot of information up there. Here's one, GGA CPA Services. So we are especially pleased to be able to partner with Victor. As you can see, Victor he's in our En Español series. He is fully bilingual. And so we're really happy that PIDC is working with Victor, not just for English speaking, but to the extent that we could get other languages involved. If you have other people who are bilingual and need these kind of support services, which is rare. I will tell you, it is rare to find bilingual professionals in these areas. So we will make this information available to you. We'll make Victor's information available to you. We will make Steve's information available to you. But please, please don't continue in your business if you do not have a tax professional. So with that, Victor, can you please give us some parting remarks?
So Marla, thanks again for the nice words, and I love it because there's so much interaction and like mentioned so many good things and great items. So what I will say is to close is that there's a cost opportunity of not doing business the right way. So there was a lot of information today, but if I don't report my income, right, like the proper income, and I don't pay as much in taxes, let's suppose, right, and it doesn't show that I'm doing well, then I wouldn't have been able to buy my home. I wouldn't have been able to buy other companies. I wouldn't have been able. So I understand that it's difficult so many times, but the cost opportunity of not doing things right and not having the right professionals in place, it will cost your business way more, because it will say, I didn't report enough. It was $1,000, $2,000, $3,000, but I was not able to get a PIDC loan of $100,000 for the equipment, that I will be growing 20%. I was not able to get from PIDC what I wanted. So the cost opportunity or the interest rate on that loan will be 2-3 points or 3% more, right? 2% more on 100,000, you're losing every year $2,000 additional, right? For 10 years, 20 years, then you lost in 20 years $2,000, $40,000. So why didn't you pay $2,000, $3,000 in taxes that year? Report what it was good, what it was fair for everyone, right? Because you have to contribute to society, and it's a way taxes to contribute to society, and we like to have the services, right? So if you pay something that is fair, right, you will have opportunities in your business, in your personal life, that otherwise you will not have. And if you play by the rules of the game, then your life will be much, much better for everyone. So I think that will be my final remark, and how, like Marla just mentioned perfectly, hey, there's a cost opportunity if you just don't bring us the right information. And there's benefit. Working with a professional, there will be more value than the cost of their services. Otherwise, I wouldn't be in business.
You know, Victor, there was something else that you said that I think people forget. People accept extensions from their accountants so very easily. But what you said is, when you file an extension, you more than likely turn a spotlight. You didn't say it like this, but you more than likely turn a spotlight on your business for filing the extension. So you don't want the, we all have to pay taxes, but you don't want the IRS to look at you any closer than they already are. So the benefit is not only, so file the taxes on time and pay the taxes on time. All right, so with that, we're going to work with Victor to try to get this repeated again at the beginning of the year. So for those of you who have not made your appointments with your tax professionals, hopefully today's workshop gave you some information as you're going in. If you have not made those appointments, now is the time to do it in December. If for some reason, and this is a priority, so this should be something that's done before December, because once you get into January, your tax professionals are going to delay when they can fit you in, because everybody else is scheduling ahead of you. That's what you don't want. But if you have to do it in January, we're going to try to get Victor to come again to do this webinar. But until then, try to get on your tax professional's calendar, start gathering the information that Victor mentioned in today's webinar. We'll get the copy of the webinar to you. And for everybody else, have a wonderful holiday, stay safe. COVID numbers are increasing again, so just continue to wear your mask if that's what you want to do. Social distance if that's what you want to do. But we look forward to you being healthy in the new year. So thank you, everyone. Have a great holiday. Take good care. Victor, thank you again. And thank you, everybody who's on here. I see everybody. I see names that I haven't seen in a while. Brian, I see you. Vince, I see you. Zana, I see you. Martha, I see you. So thank you, everyone. Ariana, everybody. Giovanna, Ken, thank you so much for coming today. And feel free. You have my email addresses. So feel free. I'm going to put my email address in here again. So if you have any more questions, just let me know. Okay. Good to see everybody after 2 years, right? It's good to see everybody. Take good care.